What a day it has been. Gold, silver, Bitcoin, copper, everything is dumping. Now, of course, Bitcoin is dumping, but why is that? Well, most likely because it is actually following gold and commodities. So let's go straight into it. Let's look at gold and silver. So here's gold on the bottom. We can see that gold has taken quite a hit today. If we zoom in, we can see that gold has dumped a good 9% on the day, on the most part, but it has recovered now. You can see it has already gone up almost 4 or 5%. And of course, silver has also dumped. It has dumped also a bit more, 12%. And it's very normal. I mean, if you zoom out here, you can see how much they have been pumping over the last couple of months. They're all at all-time highs practically. And it's normal that if they go up like 8%, 7% on a daily basis, as they have been over the last couple of weeks, it's normal that they start correcting as well. And they're basically behaving like altcoins. People have been saying, oh no, Bitcoin and altcoins are too risky. I'd rather buy gold and silver and commodities. But you see, if we're pumping this much, of course we're going to dump as well. And this dump happened today. But what I find more interesting is that we have actually corrected already. So if I zoom in a bit, we can see here that silver has already gone up from its low to currently 7%. Gold has gone up from the low to the high 5%. And those are good recovery signs. Now, just a quick note. Gold actually, within 30 minutes, it has wiped out $2.5 trillion of market cap. And that, as we know, is the exact same market cap as the total cryptocurrency market cap. And this just shows how early we are for Bitcoin, for cryptocurrencies. If within 30 minutes, gold can dump as much as the entire crypto market, right? And that just shows we're still early. So let's look at Bitcoin. How did Bitcoin react? Well, Bitcoin obviously has also gone down. It's reacting very much to the commodities markets. And we can see here that we're currently retesting critical support here, which we have retested 2 times in December 2025 and also here on the 1st of December and also on the 20th of December 2025. And this is at around $84,200. We are now going below it, but I do not think that's a cause for concern. And we are gonna still hit our CME price target. Our price target is at around $93,000. Now, why is that our price target? Because we have a CME gap. A CME gap is formed over the weekend. It is the price difference that Bitcoin makes over the weekend. And these gaps are usually filled 95% of the time. We can see, for example, here we had a gap formed at around 88,000. This was in the 31st of December 2025. Here we went up, we set the gap open, and then we filled it eventually right here on basically last week, 21st of January. We had another CME gap here. Actually, we had one here. You can see there's one here. I didn't mark it, but we filled it the next week. And then we have one remaining right here. This is the CME gap. There's a small gap here at $93,000, which we have not filled yet. And that's where I think we're going to go in the next couple of days or weeks. You can see that Bitcoin is also recovering here. We have already gone up a small amount from the bottom, and we've gone up basically at 1%, but we are going up similar to gold and silver. And eventually we're gonna fill that gap at 93,000, which is where I think most likely we are gonna go to, given that we are usually filling these CME gaps. You can also see that we had one CME gap here formed at 88,000, and that was of course filled very quickly again in the next couple of hours. Now, a very interesting thing I want to talk about is that if we compare basically here gold, silver, gold, silver, copper, and Bitcoin, we can see, and I want to highlight this to you guys, if I draw a vertical line here, we can basically draw that line here, and we can draw another line in 2020 around about here. So the top is gold, this is silver, the blue silver. When they go up hard. But contrary to that, copper and Bitcoin usually behave in the opposite way. let's go back. So basically what I was trying to show you guys is that whenever gold and silver, you see they're going down, they're consolidating. Here we can see a consolidation. They're going down or they're going sideways. Gold and copper, they're ripping up, they're going up. So there's the opposite, there's a divergence, right? The same thing here. Gold and copper are going up while silver is consolidating. Gold is also consolidating and going downwards. And the same thing is happening right now. Basically, we can see, if we zoom in a bit, so if we go to like to the 4 hourly, what I want to show you guys is basically that we can see once gold and silver start going down, this is usually beneficial for copper and Bitcoin, right? And therefore, I think that copper and Bitcoin can be going up long term. Also, if we start lowering the interest rates, they'll be going up. If we look at this here, this is a divergence I want to show you guys also, which is good for Bitcoin. And basically it's showing Bitcoin against the Nasdaq. And they normally follow very closely. And we can see a divergence happening right now, whereby Bitcoin is actually going down while the Nasdaq and the general S&P 500 is still going up. And this gap will eventually be filled. And therefore, I think that eventually Bitcoin will go higher in the long run. Now, in the next couple of months, I do think it's going to go lower because we're in a bear market. But once we have lower interest rates again, and eventually we're going to have a very nice pump coming towards us. And with that being said, that's all for today's video. Hope you guys liked it. See you next time. Bye.